The DTCC just made one of the most significant Chainlink announcements we've seen in years, and if you care about where this technology is actually going, you want to pay attention to this one specifically. Before we dive in, please make sure to subscribe, as more videos coming very soon. On May 12th, the DTCC, or the Depository Trust and Clearing Corporation, confirmed that its Collateral AppChain will integrate Chainlink's Runtime environment, or CRE, along with the Chainlink's data standard. The goal is 24/7 near real-time collateral management across global markets and blockchains. They're targeting a production launch in Q4 of this year. Now let me give you a second to appreciate what DTCC actually is. Last year alone, they processed $4.7 quadrillion in securities transactions. They hold custody of securities from over 150 countries, valued at $114 trillion. When the DTCC moves, it moves with the weight of the entire post-trade infrastructure of the US financial system behind it. Clearing, settlement, asset servicing, risk management. If Wall Street is the engine, then DTCC is the part that keeps it from falling apart. So what is Chainlink actually doing inside this platform? The Collateral AppChain runs on Hyperledger Besu, and it's built as shared infrastructure, one common foundation for collateral providers, receivers, management, tri-party agents and custodians to all plug into. The problem it's solving is one that anyone in TradFi knows very well. Collateral is constantly trapped, locked across institutions, across time zones, sitting idle while market risks pile up, and capital that could be working just isn't. The whole system runs on manual processes, delayed valuations, and siloed data that doesn't talk to itself. Chainlink CRE becomes a data and orchestration layer that changes all of that. On-chain asset prices, valuations, eligibility checks, margin calculations, settlement instructions are all automated, all running continuously. And that matters a lot. New asset classes and data types can be added without rebuilding the pipeline from scratch every time. This is an infrastructure that's meant to grow, not just a one use case integration. And Sergey Nazarov, the CEO of Chainlink, as you all know, put it plainly when the announcement dropped. He called collateral management the killer app that traditional finance has been waiting for from our industry, and said that CRE can pull together and orchestrate many critical outputs in a secure, private and compliant manner. When you look at the scale of what's being built here, that framing pretty much holds up. It's also worth understanding that this didn't come out of nowhere. 2 years ago, back in 2024, DTCC and Chainlink actually ran the Smart NAV pilot with JP Morgan, Franklin Templeton and BNY Mellon, testing how to get mutual fund net asset value data into blockchain networks in a reliable way. This announcement is that relationship graduating into production infrastructure. And when you zoom out, the DTCC is one of the growing list of institutions that have made that move. Think about Swift, Euroclear, MasterCard, Fidelity International, UBS. I think if you put them together, the pattern is very clear. Chainlink has become that infrastructure layer that these big financial institutions keep reaching for. And DTCC also confirmed separately that a broader tokenization service is launching in October this year, with over 50 firms already in the working group and live transaction testing planned for July. So the Collateral AppChain is just one piece of a much larger infrastructure shift happening in parallel. Better collateral mobility means institutions can deploy their assets more effectively, hold less excess capital and move value across borders and time zones without waiting for the Monday to happen in New York. And all of this is going live in production before the end of this year. It's very impressive that we keep getting these updates on such a regular basis from Chainlink. And I know a lot of you are waiting for the price of the token to catch up as well, because I get a lot of comments about that. But I strongly believe that given time, this heavily undervalued asset will definitely catch up. Now, this is not a financial advice, this is just my personal opinion. But if you see the patterns, I'm sure you can figure this out on your own as well. In any case, I've linked the full press release in the description if you want to dig into the details. Let me know in the comments what you think this means for the broader tokenization market, and I'll see you in the next video, which will be hopefully in a few days. Thank you. Cheers. Bye-bye.